Good morning, trading world. It is March 23rd, 2023, a day after the FOMC announcement, and this is my pre-market outlook and technical analysis for day trading the markets. Now, the Fed mess is over. The market spoke clearly. The market was telling us before the FOMC announcement that it had already factored in a 25 basis point hike. Remember, buy the rumor, sell the news. Shortly after the Q&A portion of the FOMC, the market let you know how it felt about current market conditions by dropping back down to the top of the volatility box. Nobody thinks banks are in the clear. Companies are still laying off by the thousands, and there is still a global slowdown happening. The headwinds are so strong you can't raise an umbrella to cover yourself from the shitstorm because it's coming from all angles. Despite all of that, I don't see the market just tanking from here. At least not totally tanking. The market still has a rotation trick up its sleeve. I'm going to be watching for rotation into value stocks. Don't confuse value for defensive. Value companies are going to be companies with good books that make money with PEs that are in line with revenue. Stupid defensive plays are going to be companies that are stable, pays a dividend, but the PE ratio is so high it makes it extremely expensive. A good example of a value company that I own right now is going to be Pfizer. Great company, great PE ratio, plenty money or plenty cash on the books, and they just did an acquisition. But it's a sound company. A good example of a stupid defensive play that I just happen to be short right now is Hershey's. Hershey's not a bad company, but so many people have already piled into this defensive play, they don't realize that the PE ratio makes the stock so expensive it makes no sense. They don't grow at a rate good enough to support the PE value that it's at right now. And looking at it just offhand, it has a PE ratio of 30.49. Because of the market timing and just sheer boneheaded thinking of professional money managers, these plays could take time. So owning the stock on value is best right now. And shorting stock or selling longer dated call spreads might be best for stupid defensive plays. Today, we get the obligatory short cover rally possibly, but don't be surprised that on Friday we get a midday drop, possibly ending with this V-shaped bottom that I've been looking for a while. This brings us to the key levels of the day. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our Jack resistance at 394 to the 395 area, Queen resistance 396 to the 397 area, and then King resistance 398 to the 401 area. On the support side, we have our Jack support at 392 to the 391 area, Queen support 390 to the 389 area, and then King support 388 to the 386 area. The main thesis for today is bullish, closing above the 392.11 with a projected target high of between 393 and 401. The alternate thesis is bearish, closing below the 392.11 with a projected target low of between 392 and 387. The main channel we are in is from 397 down to 379. The main channel below that is 379 down to 364. Yesterday, market strength and breadth was largely range bound until the Fed talked us up higher, or to the higher part of a range, just to pull the rug from under us. I expect strength to open stronger this morning and reverse later in the day. We have dissonance between the technical side, which is bearish, and the quant side, which is bullish. The futures also have a bullish bias for the day with a dissonance between the technical side, which is bearish, and the quant side, which is bullish. That brings us to the scenarios of the day. All right, our first scenario in this ever-changing market right now, as things are evolving rapidly this morning. I have the expanded range day structure as the most probable scenario, but it is not by much. With the expanded range day structure, we could begin the day with possible consolidation back toward the overnight lows before building back up towards the highs of pre-market and beyond. This is our expanded range day structure, and range day usually means we have prominent closes above and below the previous close. All right. Let's move on to the next scenario. All right, our next scenario is going to be our trend day up. We open gap up and start with a push back toward the previous close represented by the blue line. We find support on or before this previous close, then begin the uptrend for the day. We usually find midday chop around either the possible queen or king resistance. Usually on the second part of the trend day, we usually come out looking to continue the primary trend of the morning, which would be up, but it's usually turns into a head fake that ends up with us getting a fade back in toward the close. So that is our trend day up day type structure. All right, our last scenario is our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area, find our midday chop around either the queen or king support before going back up with the same energy or force we went down with the first part of the day. Also be aware of the vice versa scenario that could have us going up first toward the jack or queen resistance area, finding our midday chop somewhere around there, maybe the queen, possibly the king resistance area, and then coming down with the same amount of force or energy that we initially went up with. So those are the scenarios of the day. Those are what I will be preparing for. It just has this eerie feeling. Well, it's not eerie because it's validated right now by the expected move or the volatility between today and tomorrow. We moved really big yesterday. Don't rule out another move like that tomorrow. I'm looking at the expected move on the SPY right now. Today is going to be relatively dull, basically. We have, well, it's not dull because a plus or minus 3.65 move on the SPY is not really dull. But when you compare that to what we have in store for Friday, we have a plus or minus 6.163 move for Friday. So there definitely will be some fireworks taking place on Friday. So I just feel like I might be looking for short positions at highs today, preparing for tomorrow. So be aware of that. We're going to end the week with a bang, one way or another. So again, as I always say, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.